evening and welcome. You're watching ET Now. The show is Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Ruchi Bhatia. We've got a power pack show lined up for you. So let's get started. Our eyes, of course, was on the Uber IPO, the most talked about startup of the decade and, of course, the biggest IPO of the year finally here. But it was, of course, a dull IPO, if I should put it like that. While Uber did have a rocky ride on the day of going to public, it finally has brought an end to all the speculations on the valuations and the share price. Beyond all of it, will it have an impact on the tech ecosystem around the world as well, including India, is something that we will have to watch out for. To discuss that and, of course, a lot more, joining me now, we have a Power Pack show and the Power Packed lineup for you. Rehan Yar Khan, he's the managing partner at Oreos Venture, also one of the early investors in Ola. Alok Goyal of Stellaris Venture Partners also joining us, and also Ramesh, the CEO at indiatech.org. Rehan, good evening. First, let me come to you. Uber was all set to join, the FANG League of Facebook, Apple, Alphabet, Google as well, that league of companies with its much touted IPO, but it turned out to be a flop show. Is this really because of the Uber specific reason, Uber specific problems, or was it because of the broader weakness, because of trade tensions, the subdued earnings of Lyft as well? Is it really fair to pin the blame entirely on Uber?
Well, it's certainly been not as exciting as everybody would have hoped for, but it wasn't surprising given what was happening with Lyft in the previous weeks, as we all saw. And the bankers were under a lot of pressure. They priced it at the bottom end, and it fell, right? So yes, it's not, while it's a great thing, an $80 billion company got created in merely like 8-9 years. I think maybe the cherry on top of the cake was missing, that it didn't come and pop, it didn't rise 10%, or it didn't hold its own. So from that point of view, I certainly think, it kind of lost that for the ecosystem. Had it done that for the ecosystem, there would have been a lot more buzz, and people would have said, wow, tech is the greatest thing, and that would have happened. So some amount of sobriety. I don't think a total loss. I think lots of pats on the back there. Like I said, an $80 billion company has been created in merely 8-9 years. So I think it's amazing from that point of view. So balanced view. It'll be also interesting to see what happens in the next 2 quarters. Certainly last week, with all the trade tensions with China, has been a very poor week for the stock markets, and it came at the end of that week. There are some other factors in play, so we'll have to see how it goes, in the weeks to come.
Right. Ramesh, let me come to you. I was reading one of the articles before doing this discussion, and it said that Morgan Stanley did get some of their richest clients to park money into Uber, and then the IPO stumbled, and the kind of dismal start that we did see to the Uber IPO. What do you really attribute this to?
Well, I mean, if you look at the Uber IPO as such, and as the earlier panelist had spoken, the timing obviously had its own issue. And of course, the fact that the company has been going through a bit of turbulence over the last 2 to 3 years, right from the time Travis left and then the next set of people took over. Those combined by market sentiments and trade-related issues, plus of course the investor-related discussions that have been coming out in the market, all of that I think contributed to a bit of dampener there. I was looking at most of the IPOs that came in for most of the top companies in the tech side, and even if you look at Uber, Lyft was at 8 to 9% plus, Uber was -8%. And of course, Facebook was at +1%. I was looking at the trends of post-IPO. I guess Uber's timing, possibly related to this kind of a combined factor, led to the dampness in the market.
Alok, let me, ask you then. Of course, what's happening in the markets, that too will have a repercussion on the Uber IPO. But is it also perhaps a sign that investors will no longer park their monies in unprofitable ventures?
So I'm personally a little bit surprised at the sort of negative vibes or negative sentiments that people are talking about with the Uber IPO. Last I checked, there haven't been too many $80 billion plus IPOs in the world. And I think it is next only to Alibaba. So whether it IPO'd at 90 versus 80, frankly, I actually don't think it matters that much. It is, I think, a very blockbuster IPO that we should be celebrating as opposed to thinking about sort of what went wrong. I mean, same argument that you're making could have been made when funding was being raised at 17 billion or even lower, or at 48 billion. The reality is many investors have made a lot of money with Uber. It's clear that the people who invested in the last round, it has not matched their expectation, but I don't think that takes away anything from the ability of some of these tech companies to have blockbuster IPOs. I actually do think that the whole trend of keeping companies private for much longer than what it used to be in the past, in many ways that stance has been vindicated with the Uber IPO as opposed to it not being vindicated.
Absolutely. In fact, Rehan was also talking about how we should be celebrating that now there is an $80 billion company. But Rehan, if I should, get you on the other bit, the US market was always touted as a better market for technology IPOs compared to India. Does that belief still hold true after the Uber IPO?
Well, it's not fair to compare it with the Indian market because we haven't seen these kind of tech IPOs in India yet. So I think it'll be very interesting to see if one of our loss-making unicorns goes and hits the IPO market in India, what happens. Don't forget, in India you have a lot of mutual funds which are buyers. And those mutual funds may not be as adventurous as some of the FIIs. So one doesn't really know what will happen in the Indian market. On the other hand, the chief investment officers of the Indian mutual funds could be looking at the US counterparts and saying, okay, losses is not such a bad thing. Let me go and buy some of this paper. But it's an experiment which has to be tried, and I don't know which company will be brave enough to go and try it first. That said, again, coming back to this market, the point which I made earlier, Alok has made that point, Ramesh has made that point, right? $80 billion IPO, 8-9-year-old company, wow, completely amazing. Yeah, okay, the price went down by 8% after it listed. Ideally, in a perfect world, but we don't live in a perfect world. It should have gone up by 8%. But are we really kind of one of those? Are we the kind of people which are nitpicking and unhappy about everything which happens and says no, we must live in an absolutely perfect world, and yeah, you must have a company which becomes an $80 billion company in 8-9 years, and as soon as it lists, its price must go up, and then all this much happens. Otherwise, disaster, right? Is that what we are? And maybe that's what we are as a human race, that we want perfection. If something doesn't fall in place, we cry about it, right? But I think it's a great thing. I'm not feeling depressed about it at all. I'm feeling good about it.
All right, no need to feel depressed about it. You should feel good about it. But let me take it across to Ramesh. Ramesh, what is going to be the impact of this IPO, not just for the American technology companies, but also for the Indian players? Your fellow panelists are of the view that one should take heart from the fact that this is a good, big technology company that has seen a massive valuation of $80 billion on on Wall Street. At India Tech, you are also working on making it easier for startups to list in India. How will that really pan out, not just for the companies outside, but in India as well?
Well, absolutely. I mean, what I meant, of course, was the fact that it's heartening to see an 80 billion kind of IPO getting subscribed and getting listed. The point that we are trying to make in India Tech, and this is something we have been working closely with the government of India, with market regulators like SEBI and so on, is the fact that if you look at the numbers, I mean, I was looking at posts in the last couple of months, 4 unicorns in the tech side got listed in the US with their IPOs. We have got 20 plus unicorns as of date in India. None of them looking at listing, and if they do, they might be looking at overseas market. But there are many amongst them who are keen to list in India. And one of the things that we are looking at is what is it that is preventing us from creating our own NASDAQ? What can be done to actually make these companies easily list in the Indian market? That is something that they are able to do overseas. The fact that there are certain listing related regulations which act as a roof, there are certain thresholds which are put in by the regulators which come in the way in comparison to stock exchanges in US or for that matter even Hong Kong and Singapore, which in the last couple of years have significantly reformed the listing procedures and norms. And of course issues like differential voting rights and shares, which are something some of the promoters in India, the founders, are especially looking at. Those are the ones which not only give some safeguards for founders in India to pursue their dreams, but of course it starts with mere listing as a facility available, minus those kind of roadblocks, if I use the term, that exists in the Indian market. So we have been working closely. We have submitted a very detailed white paper that enlists out all the roadblocks which we see. We have also, for the sake of corporate governance, given checks and balances that the market regulator should look at. We don't want this to end up as a vehicle which is misused. We would like to see genuine Indian unicorn startups who are interested and keen in listing in India actually using this route, and also the size of the market in India growing. Now, whether there is appetite in the retail market or not, we could start with the institutional placements and QIBs and so on, and then move on to the retail investor. But the point is that, are we getting to those thresholds? Are there enough systems in place that can enable this to happen? Currently, no, but we have made that list and we have submitted it to SEBI and the Government of India, based on which SEBI issued a consultation paper of sorts last month. And we have responded to that with the changes as well, on Ramesh, what we are looking at on behalf of founders.
Okay. Let me take that point across with Alok. Alok, you did hear Ramesh there talking about a separate stock exchange, and many companies, in fact in India we have 20 plus unicorns. A lot of them are looking to list outside, but some of them are looking at India as well. Is a separate stock exchange really the answer?
See, I'm personally not sure if a separate stock exchange is necessarily the answer. If you look at the Western world as well, the existing stock exchanges have been able to accommodate loss-making companies. We have to remember that it does take a while for a market to learn and build confidence about the future prospects of a loss-making company as well. I mean, go back to the Amazon IPO. Amazon did not make money for the longest time. But it has actually proven its worth to the investors over the long term. And the market always needs those first few examples on which to ride on. I have no doubt that those will happen in India as well. I mean, just to pick up from the talk track so far, everybody's talking about 20 plus unicorns. You go back just about 6-7 years back, I remember in 2013, India had only 3 unicorns. We could not have imagined that there will be 20 plus unicorns. Actually, last week we were doing some analysis, there are 29 unicorns today in India. And that shows that, we have been able to go past barriers that we thought were not possible. I am also tempted to add just one more statement, Ruchi, to the talk track here, which is that while there is a lot of hoopla about the day one drop in the price of Uber, but the reality is that investors are not putting money behind, they're not putting money for one day into a stock like Uber. People are betting on the future prospects of a company like Uber. Think about what Uber could be tomorrow if autonomous driving were to become really mass scale tomorrow. That can completely change the economics of that business. They've already started Uber Eats. Imagine again what it could be if it were to be successful in that business. Think about what an Uber could do in logistics as a space. So I think that we are actually reading too much into day one drop. People who are investing, many of those are long-term investors. They're actually taking that long-term bet about what it can be as opposed to what it is today. And I don't think that this, therefore, one day or 1 week sort of movement of the stock actually is even material.
Right. Absolutely. So the potential is a lot more, whether it is Uber Eats, what Uber could potentially do in the logistics space, and of course the issue of driverless cars. Rehan Yar Khan, as one of the early investors in Ola, do you see Ola going public anytime soon? And if that happens, will it happen here or overseas?
Well, I can't answer the second part of the question as to whether it will happen in India and it will happen overseas. I think a lot of the kind of work that Ramesh is trying to achieve in India will hopefully determine that. But I certainly think now that Uber has IPO'd and Lyft has IPO'd, I certainly think companies, not necessarily Ola, but companies like Ola, Grab, all the other taxi companies must be huddling, right? The CEOs must be huddling and sitting and thinking about their IPO plans. They've been around for almost as long as Uber has, and it's certainly time for them to get out. I think a certain pricing has been established between Lyft and Uber, so I think there's a lot of visibility into what the price could be when they IPO. So I certainly think that the boards there must be sitting and thinking about it, right? I just want to add one more point is that don't forget, since we were talking about the price of Uber dropping, don't forget Google too dropped after it listed, right? And since then it is now up more than 30x. So, just that much on price drops.
Absolutely. In fact, Alok, let me come back to the point that you were making earlier. There is a lot of potential that the investors who've put or who've parked their monies in Uber are really betting on. But will the weak IPO response perhaps force Uber to sharpen its focus on a few markets, improve its metrics? What does it really mean for their India plan, for example?
Sorry, can you repeat the last part? What would it mean for?
I'm saying, what would it mean for their India plans?
Yeah, Ruchi, can you repeat the last part of the question? Yeah. See, it's very hard to say. Clearly, they have raised $8 billion plus in this IPO. And I don't think whatever plan they have is going to be determined by the day one or the week one response. I think what a company like Uber, of course, will be thinking about in its board and the management is that, look, which battles do we fight, which opportunities do we go after? Companies like them have very many dimensions along which opportunities lie. So whether it's around the autonomous driving, whether it's around logistics, whether it's about adjacent businesses, whether it's about geographical markets of their existing business, all these are relevant opportunities for companies like Uber. They will pick their battle. Hard to say as to what Uber will do in India. I will though say one thing, that if you look at the Indian market, I do believe that Ola has been the leader on actually many counts. If you look at whether it's about the product, whether it's about market share, I don't know the numbers as well as Rehan does, but I would be surprised if they are not anywhere near to 2 million rides a day today. We were ourselves very early investors in Taxi for Sure, which got bought by Ola. So we are as much rooting for Ola. So I do believe that in India, despite sort of Uber's size and scale globally, Ola has actually demonstrated that Indian companies can actually succeed in markets where global companies have come into India as well.
Right. In fact, Rehan, let me ask you, the bittersweet part of this entire IPO process was how the co-founder Travis Kalanick wasn't really a part of the the bell ringing ceremony in the balcony, while Kalanick's fallout with Uber board was more bitter. Do you believe the Indian founders have given away a little too much to foreign investors over the years?
So I ran a poll on Twitter on the day that Uber listed, and I asked my audience, was it a good thing that he wasn't invited or a bad thing? And 87% of the people responded that it was not a good thing that he wasn't invited, and they felt it was just too harsh that the person who founded it, came up with the idea, virtually spawned the global ride-hailing industry, was left out of this momentous occasion, and they felt it was a very harsh thing to do. It doesn't cost the company anything. It's just a photo op. It's a feel good op. So I think, yeah, that was certainly a Steve Jobs moment there, where he was ousted. Coming to India, you see, most of our investors here are, they've certainly given up a lot of equity, right? Because a lot of them are down to single digits. Some of them are in low double digits. So yes, they are worried. I think there have been news articles about Ola themselves being worried about, the whole equation with SoftBank and how they've tried to diversify their base of investors. So we know people are thinking about it. In Flipkart's case, there were many views, not necessarily my view, but there were views that the founders may have been ousted, etc. We don't know. We don't know what's real. We certainly know that founders have gotten together and are working with, have formed India Tech, and are trying to get back some of that through differential voting rights. And we'll have to see how that goes. In the US, there's also counter backlash to that. If you see the backlash that is coming to Facebook with Zuckerberg now controlling 60% of voting rights in there, and they're saying he's just too powerful, and he's becoming a kind of a giant in the space, and there are not enough voices on the board. His co-founder came out and made some noises about that.
Right.
So I'm just telling you that there are diverse points of view on that. We are not sure what's right, what's wrong.
Absolutely.
But that's what's happening in the space.
Let me take that point across with Ramesh. Ramesh, you're working on this very closely. On the role of the Indian founders, most of them end up not having too much skin in the game with multiple rounds of funding. Now there is a greater call for preferential voting rights through investors. Though investors are really divided on the issue, how should one really...
Yeah, if you look at the Indian space as such, there is a lot of talk amongst the founders that, in a comparative sense, if you look at the ownership levels in vis-a-vis US, you would find most of the founders are typically either at the 10 to 20 percentile holding of stocks, or some even closer to under 10 digit. But the point is that the DVRs, the differential voting rights, did give them the edge. Although, as it has been referred earlier, the corporate governance part comes into play. What we have been looking and exploring is the fact that in the Indian market, in a comparative sense, for a startup entrepreneur or for a founder in India, does he have the same level playing field as enjoyed by his counterparts in other parts of the world? And the differentiators do come across in the form of ability to list, in the form of ability to control the companies, or to that extent even bare minimum of running the show according to how they would like to see in certain aspects of the business. We could still keep the corporate governance part and checks and balances in place, but this we see as a major differentiator and a level playing field issue for Indian entrepreneurs, and this is the time to fix it. We shouldn't regret 10 years later that we never tried, because you would always have competitors from other parts of the world taking advantage of this and growing on further. This is something that we are trying to work closely with the government and the regulator to see if this level playing field can be created in India, and this will also help the Indian markets grow, having a piece of those emerging unicorns that are coming from India.
True. In fact, the government also is looking at the issue of differential voting rights very actively. But Rehan Yar Khan, Ola's founder Bhavesh also recently altered the articles of association on his company to secure his voting rights. Do you see other founders in the startup world doing something similar?
Well, I'm not privy to those alterations, and not having been part of some of those companies. But yes, I think people are concerned. We have a large portfolio of companies from our fund, and I do hear founders, once they start coming down to low digits, being concerned about one particular investor, being too powerful, or you see, investors also unfortunately sometimes have change in people, right, who sit on boards, and different people coming on boards can suddenly drive companies in different directions. They want to get past all those kind of issues. So there is a lot of talk around that, and I think broadly what India Tech has been talking about seems very logical and reasonable from what we are seeing so far, from what they're trying to do with SEBI, right? It's certainly a model which has been now about several years in the US, which is being done. Of course, now there is also murmurs, like I said, that founders are becoming too powerful, Zuckerberg is too powerful, and so on and so forth. But I think there's less downside to that and more upside to it. So it's certainly something we must at India at least give it a try, right? And see how it goes for the next 5, 7, 8 years. It's certainly something we should try. I'm a great believer that a founder should have charge of his company. I think founders are incredible people. They're incredibly vested in companies. They're visionary people. They drive companies extremely well. And when the founder is there, companies can do magical things. So I think that certainly should be given to the founder in India.
All right, on that note, let me thank all our guests, Rehan, Khan, Alok, as well as Ramesh. Many thanks for taking your time out, speaking to us, making sense of all those developments that have happened since Friday, ever since Uber IPO got listed below what a lot of us were really expecting it to. However, the panelists that we had on Startup Central are of the opinion that one should take heart from the kind of valuations that Uber has, and of course the long-term potential in the company. With that, it's a wrap on this edition of Startup Central. Many thanks for watching.